What we're seeing here is a market that's all over the place because people are just trying to figure out what's going to happen to interest rates. I was looking at the price of gold here just this morning. It's just been stuck in a range on the daily chart for a while, and I feel like that's indicative of the whole kind of market sentiment surrounding rates. You have, stock market hitting all-time highs, right, in the U.S. and we mentioned Europe earlier just before jumping on the podcast. So we're seeing stock markets hit all-time highs. However, it's a very thin and narrow leadership within the stock market because a lot of the other areas of the market that are more sensitive to interest rates, specifically, smaller cap companies and other areas of the S&P 500 that again require more borrowing money and things like that. The point I'm trying to get at is that the market seems all over the place with where they actually think interest rate cuts are going to come into the picture. And it does make sense that some of the leadership in the markets right now are some of the big tech names that are not so sensitive to interest rate cuts themselves. Now, of course, if the economy crashes and then changes completely, then those companies and their price evaluations will be called into question. But for the most part, it's the companies that are directly hurt by higher borrowing costs that are really struggling right now.